Good morning. It's 9 o'clock, and welcome to another morning session. I hope you're doing well. As usual, we're gonna start with the dollar. Okay. I want Okay, so I wanted to have like an interaction session today, but it's not going to be. It is possible. Type your comment in the group chat. Okay, if you're watching, just type your comment in the group chat, and I want you to think about what happened yesterday and what you're seeing right now. Okay, I want you to think about what happened, what I discussed yesterday, and then what you're seeing right now. And I want you to think if price is really random or price is manipulated. Because if price is random, then I wouldn't be able to see call these levels and price doing exactly what I said they should do. So my challenge or my advice to you is to take time and study it properly. Everything that I've shared, okay, they are repeating stuff, right? They repeat all the time. Most of the stuff that I shared, they repeat most of the time. Now, and the fact that they repeat most of the time doesn't mean you have to be in the chat every day like I am. I have to be in the chat every day because I have to provide you guys with insight in the market. You don't have to do that. All right. So you don't have to be in the market every day. Now, with all this knowledge, you can still have losses. Okay. And the reason why you're going to have losses is not because of the chart. It's going to be because of your mind, your mindset that you use to approach the chart. That's going to be your problem. Okay. So I just wanted to have this little conversation before I go into the charts. So what's going to happen is you're going to get excited with everything that you've learned and you're going to do well. But if you don't take control, if you don't take care of the mindset that you're going to use to approach the stuff that you've learned, okay, it's not going to benefit you, right? So 90% of trading is all mindset. I want you to think about that and actually internalize it. 90% of trading is mindset, and then 10% is technical. Once you have your technicals down, then the next step that you need to be battling is with the mind. Okay. So going forward, I know most of you I won't say excited, but most of you understand the things that I've shared with you guys, but I don't know if you can apply it. If you can't apply it at the moment, it's fine, it's normal. You just have to get used to it and do it over and over and over again. But once you understand it, then the rest will be okay. How you're going to trade it with regards to whether the type of trader you are, time frames that you're going to use, and how you are going to approach the market in general. That is going to be your stumbling block. So going forward, yes, you're going to spend time on the chart, but I want you to spend some time doing mindset work. And the reason why I'm giving you this advice is because you will get to a point, and it's coming from experience, you will get to a point where your mind will be the only reason why you're not exactly where you are or where you want to be. Yeah. And most of it will come from taking time to actually steady yourself. So do a lot of training on your mind. Read books. A lot of books that will help you in terms of trading psychology, and also read books, self-help books as well. I recommend one. The one I recommend is called because I'm actually listening to the book. I've listened. It's an audio book. I've listened to it. It's really, really good. It's called a happy pocket full of money by David Cameron. A happy pocket full of money by David Cameron. Okay. A Happy Pocket Full of Money by David Cameron. Just go online and then find that book and read it, or listen to the audio, because it's on YouTube. Okay. And that should help you with your mindset. And once you've got the mindset right, the trading or the technicals will be no problem. Yeah, that's what I've come to realize. As much as the technicals seems to be the one that you need to spend time on, it's really not. Okay? It's really not. It's the mindset that you need to develop to actually trade the technicals. That's where you need to be. Okay? So I'm not gonna there's nothing much going on. We have a few trades that did play out and we got one stopped out. Nothing much going, nothing different going on. I just want to spend time talking to you, so to get your mind, because every day if I do charts, you're gonna think that trading is all about charts. Yeah, and it's not. I've done, I think, 2 or 3 psychology lessons, and I think it's time for me to do another one, because you do need it. Okay, every now and then you do need these kind of things to remind you that what you're doing, okay, is not just technical. What you're doing is a lot of mindset behind it. So you need to also be aware and take care of your mind. Okay. In trading, you are going to take losses. You are going to take losses. And I've said this over and over again. You are going to take losses. So you need to come in terms with that it's normal for me to take losses. If you don't come in terms with you taking losses, you're gonna struggle. Yeah, if you don't accept that you are going to take losses, you're gonna struggle. Why? Because when you take a trade and the trade is not going your way, you will fight the market to let it go your way, and it's not going to be possible. Yeah, you will fight the market to go your way, and it's not going to be possible. The market is always 125% right. Yeah, the market is always 125% right. You need to align yourself with it, because if you don't, then it's gonna beat you up. If you had a bad trading week, it doesn't define your entire career as a trader. So if you had a bad week, it's just a bad week, and don't let that bring you down mentally, psychologically, because if you let it bring you down, what you're gonna realize is from that moment, you see that trading, you find it hard. Why? Because you've submitted your mindset to viewing trading as is hard. So when you have a bad week, do not think that, okay, I had a bad week, this thing is too hard, am I really gonna make it? Don't do that. When you have a bad week, it's just a bad week. You gather yourself, and then the following week you go again. Like I did, I think I've mentioned it a couple of weeks ago. I've spent some time doing some trading psychology, and it's so astonishing the things that I'm learning. The way your mind will play with you when it comes to yourself and the chart, and you find yourself doing certain things that you don't even realize until the moment has passed, and then you realize what you've done. And I'll give you an example. So when a trade is going against you, and you refuse to close the trade, all right? You refuse to close the trade, and in your mind you're thinking it's gonna come back, and it doesn't, and it keeps going against you, and you keep telling yourself it's gonna come back. By the time you realize, the trade has gone so far away that you cannot stand the chance of losing even 1 penny more, because if you do, I think it's gonna break you. Yeah, you cannot stand a chance of losing 1 penny more, because if you do, it's gonna break you. That's when you close your trade. And as soon as you close your trade, guess what happens? The trade will start going your way, and then you're gonna scream to yourself. The reason why that happens is that's why I said spend time with studying your mind, things about your mindset, is because we call something fear. Now, when it comes to fear outside trading, that's different. But when it comes to fear in the market, this is what is happening. You are focusing on something that you don't want to happen. Yeah, you don't want that to happen, which is you don't want to see price go against you, and you focus on that. And then it distracts you from seeing what is actually happening. Let's go to the chart, and then I'll show you an example. This is real life experience. Okay, let's go back in time, and that was 2018. Okay, so 2018 ran about in, I think I took the position in July, getting to July, right here. So that was weekly chart. I'm going to the monthly. $2018, yeah. So in here, okay, let's drop down to the weekly. Okay, right in here, May, June, drop down to the daily. Yeah. So right in here, there, getting to the end of May, right, I took a position on the British pound USD, right, and in my mind this thing was bullish, right? So I was buying to continue the bullish trend on the weekly time frame. Okay, because the weekly was bullish, and you can see that was the case. The weekly was bullish, so we came back down to a significant area, and I'm looking for a continuation to the upside, which is normal. And then price started going against me. Let's go back. Price started going against me right here. Price started going against me, but because I was so focused on me being right and not looking at price as price is behaving, and I'm focused on where I think price should go rather than what price is going. Yeah, it's not about technicals, because technicals is telling me that yes, we have come to an area that we can offer bullishness, and that's right, but price is not doing that. But because the mind is not focused on that at that particular moment, when price starts going against you and you are not willing, you're not willing to accept the fact that price is going against you, that instant right there will block your mindset. There will be like a mental freeze. You go into a state of I won't say panic. You go into a state of freeze where your mind freezes to see the chart the way you should see it or perceive reality of trading, the way you should see it. And then price will keep going against you. So as price is going against you, you will be focusing on, you'll not be focusing on the down movement. You'll be focusing on the up movement. Why? Because when price moves up, okay, when price moves up, it kind of gives you this joy. Okay, price is coming back. Okay, price is coming back. And then it will go back against you, and then you forget that price is going down. Yeah, you forget that price is going down. And then anytime it pulls back up again, it gives you this joy that price is going to come back. And then it goes against you. And then it pulls back up again. And then it blocks your reality, okay, that of this movement. You will be blind to it. You will not see it. And I'm talking to you from experience, right? You will not see it because price is like, okay, I can see price is, you cannot see that it's going down. All you see is the retracement. Yeah? You see the retracement as, okay, price is now going to come back and go up. And all this is coming from you not accepting the initial loss that you were meant to take. So now your perspective about price has changed and you are being blind. Yeah, you're focused on price going for you instead of focusing on the chart and see what is actually going on. So what happened to me is anytime there was a dip, instead of me selling and continue going down, I was actually looking to buy more. So anytime it pulls back up, okay, in my mind, okay, price is not gonna go up, then I'll buy more, and it goes against me. And the funny thing is, instead of me buying when it makes the low, I don't do that. I buy it when it makes the high. Yeah, I buy it when it makes the high, because maybe you have experience about this. What you're seeing is not you. It is you, but it's not you. You something else has taken over you, which is the reason why a lot of traders get, I won't say a lot of traders get into these kind of problems, okay, because they are not using their self to do that. Something takes over, and what takes over is fear. You are fear. You are afraid of taking a loss, and because you are afraid of taking a loss, it pushes your mindset to focus on something that you don't want. And as you focus on the things that you don't want, those are the things that exactly will happen or will be in the chart to see, because that's what you want to see. Yeah. And then I'll quote what's his name? I'll quote Mark Douglas. He said that fear will block your fear will block your fear will block your reality from seeing what you're supposed to see. So it blocks your reality from seeing what you're supposed to see. So if you're supposed to see that price is going down, it blocks that, and then rather makes you focus on the things that you don't want to see. So what that means is, what you want to see is up movement, okay? So that's what you are seeing. So fear is blocking your perspective of seeing what you want to see. What you are seeing is just that you're not seeing this, the movement to the downside. You're seeing the up movement. Why? Because that's what you want to see. So you are only focused on this movement. So anytime there's this movement, you get active. Anytime there's this movement, you disconnect. And anytime there's this movement, you get active. This movement, you disconnect. And then you get active here, and then this movement, you disconnect. Until it gets to a point that you cannot bear the pain. Okay, because as price is going down, you might be in a drawdown. So you cannot bear the pain that the down movement is giving you. Yeah, you cannot bear it anymore. And then you're gonna close your trade at some point. And then as soon as you close it, that very moment is when price is gonna shoot back up. And that's exactly what happened. So I closed this trade exactly here. Okay, I closed this trade exactly here. And then guess what? 2 days, price turned around and came back to where? Almost to my original entry right there. I know most of you have experienced, because it's normal. Yeah, it's not abnormal. It's normal things that happens in price. Yeah, it's normal things that happen in price. So almost every trader that has gone through a development stage has passed through this. And if you haven't, you will. That's why I don't want you to. I don't want you to go through that, because it's just not it's not a healthy thing to go through. It's good in some way because it develops you, it develops your mindset, but it's not a good feeling to go through that. Okay, so one of the things that will help you in not going through this experience is, first of all, you need to accept that you are going to take losses. Yeah, you need to accept that. I mean, really accept it. Not mouth service. That yeah. I accept that I'm gonna take losses. No, not that. You need to really accept it. Because once you do, you're gonna take 20, 50 losses, and you will still come back again. But if you don't accept it, you take 20, 50 losses, and that will beat you down, and you will be on the verge of giving up. Because trust me, this market is, in the first place, it's not meant for you and I. Yeah, it was meant for the institutions. Okay, what is going on in here is a battle between two forces. All right, it's a battle between two forces. It's a battle between central banks and institutions. Yeah, when it comes to trading currencies, foreign exchange, it's a battleground between central bank and institutions. Okay, central bank is offering liquidity, and institutions are using the liquidity to facilitate business. Okay, the central bank are also in business, but they are the storehouse, so they produce the currencies. And then when they produce the currency, then the institutions will use the currencies to facilitate business. So it's a battleground for central banks and institutions. And I'm going to show you that right now. So you kind of take what I'm saying into heart. So if I go to let's use the British pound because I'm in UK, obviously. And let's go to the current contract, which is the December 2020 contract. And let's change this to candlesticks. Alright, and I'm gonna plot something called the COT data. And the reason why I'm showing you this is for you to understand, so that you know what you're in for. All right. Okay. Now, the reason why I said it's a battleground between central banks and institutions is this. So this red line, as you see, is for the central banks or commercials, but that's the central banks basically. And then the green line is the institutions, the banks, not the central, the banks, the hedge funds, all those people that uses currency for business. Those are the green lines. So you can see that anything that the red line does, the green line does the opposite. Anything the red line does, the green line does the opposite. Okay, so any movement is diametrically opposed to the green line. So the green line is the institutions, is the like the hedge funds, the insurance companies, the small banks. Okay, and then the red line is the central banks, the banks that probably most of you will never hear of. Those are these guys. They produce currencies. They produce what we call liquidity. One thing you need to know is that when price is going down, okay, someone is short and someone is long. Okay, someone is short and someone is long. So who is short and who is long? So whoever is long is probably losing money. Yeah, whoever is long is probably losing money. Why? Because if you're long and price is going down, you'll be losing money. So who in the hell in their right mind will be buying as price is going down? Because there has to be someone on the other side of this going down. So if there's no one on the other side, price will not move. Okay, so there has to be someone on the other side as price is going down. So these guys, the red line, they are always not always on the wrong side. They are always offering the other side of what the green lines are looking for. What does that mean? As price is going down now, the institutions are selling, but the central banks are offering the other side of that trade, which is the buy. Yeah, so the central banks are offering them the liquidity, and then they will be taking that liquidity to take price down. So it's like there is a handshake. I give you one, you give me one. You buy, I sell. You buy, I sell. So right now, central banks are buying, institutions are selling. And then we can see price flowing freely, and that's what we call institutional order flow. The institutions are flowing down gradually. It will get to a point where the central banks will change their mind not to offer their buying. Okay, it will come to a point that they will decide on their own terms that they will not offer the buy side for the institutions to take the sell side to take price down. Okay, and then when that happens, price will turn around. So once price turns around, as price was dropping, who was buying? Central banks. So when price turns around, they manufacture this. They don't take losses. Okay, central banks don't take losses. They are in. It's like they produce currencies, so they cannot take losses. So they can they can start buying up here, and still hold their trade or hold that position to take price all the way back down here. And then once the price gets to where they think they've had enough, or they cannot produce the buy side for the institutions to take the other side of which is the sell side. When they get to a point that they don't want that anymore, price will turn around. And then when price turns around, they will be now offering the sell side. So as price is going up, they'll be selling, and then the institutions will take the buy side, and then price will go up. So it's a battleground for these two. It's not a battleground for you and I. Once you understand this, then it doesn't make sense holding on to a trade. Yeah, it doesn't make sense holding on to a trade, because you're not the central bank to say, okay, price gets to this point, I'm gonna turn it around because I don't want to offer that side of the market anymore. Or if price is going up, you don't want to close your trade because you think you can turn price around. You cannot do that. So make sure you accept, okay, you accept the risk. Admit that you are going to take losses. Not just one, not two, not three. You are going to take losses. And once you accept that, you can trade with a free mind that I don't care whether I take a loss. I don't care whether I take a win. All I'm going to do is just trade what I know. Yeah, all you're going to do is trade what you know. And that will put you in a different realm where you see a trade and you don't think about, okay, where should I put my stop loss because I don't want price to come and stop me out. You won't do that. You're just going to define, okay, where will I be wrong taking this trade? Yeah, where will I be wrong taking this trade? If I take this particular trade, let's go on to the lower time frame. Okay, for example, on this one here, if I want to take a sell, where will I be wrong? I can sell right now, but where will I be wrong? If price gets there, then I'm wrong, or the trade is not valid. To use the right terminology, the trade is not valid. It's not that I'm wrong. There's nothing wrong or right. The trade is just not valid anymore. And that's where you place your stop loss. Okay, where the trade is not valid anymore, that is where you place your stop loss. And then you let the trade, or you let price do its thing. You cannot move the market even a pipette, right? Pipette is the last increment in price. This last one here, your account cannot move that. Yeah, your account cannot move this pair, this currency pair, even one of them. It cannot move it. So do not worry yourself too much when it comes to looking at this currency pair. All you have to do is define where you want to get in, where you think when price gets there, trade is not valid anymore. Yeah, the keyword is valid. The trade is not valid, meaning if price gets there, there's a chance, there's a high probability that it's gonna go the other way. And that's where you place your stop loss, and then you leave it for the market to do its thing. Do not worry yourself. In my early development, I barely slept, because when I get into a trade, every 1 minute I'll be looking at it. Yeah, on my phone. At work, every 2 minutes I'll look at it to see, is it going my way? Is it going the other way? Yeah. Once you understand what I've just shared with you here, that it's a battleground between institutions and central banks, and they don't care about your stop loss. Yeah, they don't care about your stop loss. That's not what they're interested in. They don't care about your stop loss, because your stop loss is not gonna offer them a position in the market. So do not worry yourself too much when you get into a trade, because you are not going to push the market around. So why worry? And you cannot, once you enter the trade, you are at the mercy of the market. Yeah, once you enter the trade, you are at the mercy of the market. The market can do whatever it wants with your trade. You cannot do anything to it. So it all boils down to developing a mindset that will prevent you from fighting with the market. So you have to have a mindset that will give you like a rule-based, or in a robotic way. I'm doing this, and if this happens, I do that, and if that happens, I do this, and that's it. But being a human being, we are not robots. We are subject to emotions. We are subject to change, and that's where the problem is. Yeah, we are subject to change. We are subject to emotions. So once you get into a trade, as soon as you see your account go maybe up 1%, okay, you get excited. Yeah, I'm making money. Yeah, let me close it. And then as soon as you start losing, you be like, yeah, I don't want to lose this. I think it's gonna come back. Yeah, it becomes a battleground in your mind rather than on the chart, because you're not fighting the chart, you're just fighting your mind. So if you are in that stage and you are going through it's a development stage, okay, it's not bad, it's good for your development. And once you overcome that, you gain the experience that I have gained, so that when you move on to become a great trader, which I know you all are going to be, you can use that experience to advise upcoming traders as well. So if you're going through any difficulty, rest assured that it's normal. It's part of the development stage, but just make sure you work on mostly your mindset rather than looking for ways to not avoid losses, but you're looking for ways to make high probability trades. It's not about that. Yeah, it's not about, and it's not even about taking the right trades. It's about having the right process that you follow every time you enter a trade. So if your process is I go to ABC, you make sure you always follow the process of going to ABC, and that comes with discipline. Yeah, so you have to have discipline to always go through the process of ABC, and the outcome is going to be whether win or loss, and you don't change it. Next time you do ABC, the outcome, whether win or loss, you don't change it, and then you do ABC again. I hope this lesson will help you. I don't know why I'm doing this today, but I feel like doing it because from time to time you need something like this to remind you that even if you're going through any hardship or any difficulty in your trading journey, it is normal. Yeah, it's normal to feel like sometimes you don't know what you're looking for, or sometimes you don't know what you're doing. It is normal. But if you continue, if you persevere and you continue, you're gonna see later that what you were going through was absolutely normal. Maybe now it doesn't feel like it's normal, but later on you're gonna see that it was normal. See, I had to go through that stage back in what was it? Yeah, I had to go through that stage to understand that once I see a breaking structure, that's it. The trade is not gonna come back. Yeah, once I see a breaking structure, that's it. The trade is not gonna come back. So let's say, for example, if I accepted, okay, that right here, as this broke down, if I had accepted just this loss, okay, that would have been a loss of about, let's say, about $400 to $500 or £500, whichever currency it is. Okay, rather than sitting through all this and then closing down here. So multiply that to the downside. That's 1, 2, 3, almost 4. So almost $2,000. Instead of 5, you lose 2. Instead of $500, you lose $2,000. Right? And if you had accepted that 5, you could have made it back by even seeing that price has changed direction so that you can go short, and you'd have made more. But because it's like you don't want that to happen, you're focusing on the other side, and you end up losing more. Like I said, I don't know why I'm doing this this session today, but I think it's necessary. I think the last time I did one was 2 months ago, and every now and then you need this reminder. Yeah, every now and then you need this reminder to remind you, so that it's like you don't forget. Because sometimes you will get into a state, we call it state of euphoria, where you think maybe you've been consistent, you've been making some profits for a long time, so you think you are all, okay, you know everything now. Everything is, you cannot take a loss, You think you're now the king of trading. Yeah, you need that reminder that you need to humble yourself, because the market is like a it's like a wild beast. Maybe the beast is sleeping, so you've got to enjoy to walk around freely. And then when it wakes up, it start biting you. You don't start crying. Okay, so it's a reminder that yes, if you're consistent, you just need to be humble and keep doing the same thing over and over again. But also be aware that there is risk involved, that you will take losses. I don't want you to focus on them when they happen. As you know, or as you've seen, anytime we take a loss, I don't go back on it. It's because I learned something about the power of the mind, where anything you focus on, you tend to attract it. So if you always focus on losses, you're going to attract losses. And if you focus on wins, you're going to attract wins. So that's why I don't focus much on the losses. But when we take a win, and then I like to show you, because I want you to internalize the procedure that took you to take that win. And then the loss, once you go over it, this was a loss, and that's it. You don't think about it, you don't do anything about it, you just learn from it, and then you move on. But the wins, you look at it over and over again to see what led you to take that trade, and what was your thought process that led you to choose that particular trade. Yeah, so if you go on to like Aussie, New Zealand, the trade that we took this week, and let's go on to this one. Okay, not that one. Here you can see price came to our entry, dive down, retracement, and a continuation, and then we hit TP1 and TP2 on a go. Yeah, you want to steady. Okay, yep, I got an entry here, and then price gradually went down. Why did I take the entry? Because there was a last up candle in here, price was dropping, so the entry was a perfect entry, and then price let down. So you internalize this whole price structure. So in future, if you see something like that, let's say dollar yen, okay, in future, if you see, let's say we are bullish on the 4-hour, price comes down to a last down candle, it's similar to this one, so there's a high probability that price is gonna go this way, then you buy it. That you focus on that positive outcome, instead of this one here. If you go into the 4-hour, instead of focusing on the loss that we took in here, okay, yes, there was an up candle in here, price came there and then went up. Okay, I shouldn't, it's a breaking structure, so next time I will be aware that once price does this, it's a breaking structure, then I can take a long. Then you learn from that. Yeah, so let's go back to this one again. You learn from this and say, okay, price went up and took this high and then broke down, so I got an entry here, so that looks like a very good trade. Next time I'll look for something like this, and then every time you take a win, you go back and look at it, and then you internalize the procedure, so that going forward you will start attracting this kind of pattern, or let's say this kind of price action, and then it becomes easier. Yeah. What you focus on most of the time, that's what you end up seeing. So if you focus on the wins, you end up seeing more wins. So you spend time understanding what led to you taking that trade, and how you kind of internalize it, because you have to. When I say internalize, I hope you understand. You have to, it's like, put it in your mind eye what the procedure you took to take the trade. That's the internalization. So next time when you see price, let's say Bitcoin, okay, next time when you see price, like in here, we'd had price go up and then it broke down. So right in here, similar to what the New Zealand CAD did. Yeah, price went up, broke down, retracement, and it went down. Bitcoin, price went up, broke down, retracement, and it went down. So you internalize that, so that going forward, when you see those things happening, you will automatically be drawn to it, and you have the confidence to take those trades without worrying about taking a loss. Because when it's a loss, you know that there is a reason why that was a loss. It's either price was changing direction, which is the case on Euro New Zealand. Okay, price changed direction. We were following price to the downside, and then price changed direction. That's it. You didn't do nothing wrong. You didn't do anything that was out of the abnormal. It's just a loss. And then you learn, okay, price has broken, so I know that next time when I see this, that's a break. So then I have to do something else. All right. Okay, so hopefully you got something out of this session. I don't know, like I said, I don't know why I did it, but it's necessary that you get prompted about your psychology, because it's not every day chat. That's what I did initially. In 2015 till 2018, it was chat. So like that was about 3 years. Nothing about trading psychology. I was not interested. Yeah, I was not interested in trading psychology. I was not interested in writing down anything. All I was interested in is just trading. I want to make money today. I want to make money tomorrow. Yeah, I want to make money tomorrow. I want to get into a trade. When you start talking about trading psychology, I just shut you off, because I was not interested. But it was the most important thing that I could have done. Yeah, because the charts was not the problem, or was not going to be the problem, as you can see. Yeah, the problem would be your mind. So you guys are lucky. You're blessed that you've got a reminder, but take it to heart. Don't be like what I did. All right, and then 5 years from now, you're gonna give the same advice to someone, and then you say you wish you would have listened. Okay, listen now, and then save that 5 years for something else. All right, so like I said, we haven't had much changed. Dollar is going up as we are looking for. As I mentioned yesterday, we're gonna find support at 94.10. Yeah, go back and watch yesterday's video. We're gonna find support at 94.10, and there will be a down candle form at that level, and you can see it forming right now. Yeah, that's the down candle there, and that's the down candle there. So where is the next price? 94.60. So if we get that, then euro, we're gonna keep going down to the next level, which is down here. Pound, we're going to go back down into that level there. New Zealand, we have got that equal low taken beautifully from that breaker there. Okay, so if you did catch it, well done, to take out that equal low. I actually stayed up. I actually stayed up overnight till 3 a.m. and I saw everything that happened. It was beautiful. I mean, everything was like time clocked. They took price all the way down here to take out the equal lows, and then at 3 o'clock exactly, price shot up. When the news came out, I think it was 3:30 or 3 a.m. Yeah, 3:30. So price stalked around in there, right here, and then when the news came out, price just shot up, and that's what gave us our targets to be met on the downside. Yeah, I stood up all night watching it. Yeah, and then I also watched the New Zealand come down to a level down here, and then once the news came out, it shot back up, and then it came back down. So nothing much has changed. Its price is just is doing the same thing that we want to see happen. The only thing that we didn't catch was this one, which I have this level down here in case price gets back down there. You can look for a buy because they shot up quickly from here, so there might be some orders residing in here. So if we do come back down there, you can by all means enter from here. Okay, and yesterday I was going through the chart, and I know why price didn't get to our level, because of this gap. Yeah, I know I haven't talked much about the gaps, but it was because of this gap. Yeah, that's why price didn't come to the down candle. These gaps are very powerful. When they are in price, they are very powerful. So that's why we didn't get price to come back down there. And it's good because we call something breakaway gap. When price doesn't come back down here, it means that there's a strong tendency that price is going to continue going higher. So if we do come back down, there's that hourly level that looks interesting. You can take advantage of. Dollar Swiss, they've managed to go above that high, and like I did mention, if they do go above that high, that's when I'll be interested. So the down candle left there on the hourly looks interesting in here. Let's delete this one. Okay, this down candle looks interesting because it took some stops with it, so it looks interesting. So if prices to come back down there, I will consider something for a continuation to the upside there. Dollar CAD, we didn't come back down to the level I wanted. On the lower time frame, we did have some a push away from this. Okay, from here, that's where price pushed away. Why? Because it had a strong move away. Go back and watch that lesson again. And once we took out this stop loss, price shot up quickly, came back for retracement, and then went up. I wanted to see it come down here for this pattern to form, but it didn't, and we're seeing a continuation. So I think we're gonna continue going up on this pair. Right now I don't have any level to consider for a trade, but I think they are engineering equal highs in here, so they might come back for that one and then that one above. But if I do see anything, I will prompt you guys attention. Right now I don't know what they want to do as price is moving. Euro pound, let's remove all this business. They've come all the way back up to this last up candle, so let's see how they behave, or price would do up here. Let's see what price will do up here. If we do break down the down candle, by all means you can take this as a sell for a continuation to the downside. Okay, so watch it. If we take out this high, then we're gonna continue going up, therefore we wait for a retracement and then we take a continuation to the upside. So look at this properly in here. So they did take out this low and we shot above this high retracement. It may be they're gonna keep, you have this last up candle in there, so they might push price in here to rebalance this place. So maybe buy inside this down candle will, but we are so high in price, I wouldn't want to do that. Yeah, we are so high in price, we are trading at that daily level, so I wouldn't want to do that. But it's just normal price action that if we were not at this level, which is the last up candle, then I would have done this. But because you are so high in here, then I wouldn't consider that. Maybe this thing will break down and then we have a sell. Aussie New Zealand, let's go back to this one. We have got 2-second target. The last target is still down there. I don't want to see us break the last up candle here. Yeah, I don't want to see us. If we do, then obviously we're gonna have a continuation to the upside because price has done what it needs to do mostly. The rest was just to leave a piece on to see how far it's going to go. But if they break above this side, then I think we're going to see a continuation to the upside, which I still don't believe that will be the case. And this last up candle in here, we've come back to rebalance that. So this is when the news came and then price shot down. So as price is back here, I want to see a rejection and a continuation to the downside. However, if they break above this side, then we're going to see a move to the upside, which will be still not there. It's still not there. I still believe the price should come back down again. That's my internal belief about this price here. I think price should come back down and take out this down candle's low. Okay, it should come back down and take this low before doing that, because once they do take out that low right here, okay, that will give us the 618 level. So 618 level, reasonable level for price to retrace and a continuation to the upside. So I still think we might get price to reject and then continue going down. But if we do break above this high, then we're gonna see a continuation to the upside. Euro New Zealand, I watched this drop down and then I didn't see because I went to bed at 5. So from 5 I didn't see none of that. But on the hourly there was a up candle that I was watching, this one here, prior to the move down. I was watching to see if price will be supported there, but it seems like they haven't. It's a bit tricky to trade this right now. Why? Because you hardly see this kind of anytime you see this kind of price action, there is something going on. People will take losses. Why? Because one point we are going up, one point we are going down. So in here, in this movement, people will try to go up and continue going with it, and then they slam it down. With this movement, people will try to go short with it, and then they slam it up again. So you can see what is actually going on in here. It's a bit tricky. All right, so right now I'll say do not do anything on this. If we trade above this down candle, then I think we'll have a continuation to the upside, because remember this lesson I gave. If price goes to the 168 and it fails to get to 2 and it rejects, okay, it rejects and it trades above this, then it means that it's bullish. We're gonna go up, so we can measure this and that and look for upside objectives. So if we do break above this down candle, then I think we'll be coming back here, and then we will get probably the continuation to the upside that we were looking for here. All right, so dropping back to the 4-hour time frame. There's nothing interesting on here. They've made the price a bit muddy with this down candle. So if we do come back down, I don't like that candle there. So they've taken stops here. So the opening price on this, they've already come there. So we have to be patient. That's all we have to do. I think we have to be patient and wait for more information. It looks like they want to take out this high and that high because they are all lower highs. Okay, so it looks like they're not take that. We've already been this high and that high. We've been here, so we've rebalanced, so this becomes equal high, and then price is likely going to take that high. So we're gonna wait for more information, maybe next week. By Friday, we know what price has done, and then going into next week we have a good idea on what to do with this. Same thing with this one. We have broken to the upside for some reason. Okay, we took out this low, and the last up candle right in here, boom, we've broken it. Okay, so we are now again bullish but sideways. Yeah, bullish but sideways. So if you do get a retracement, I'll bring your attention back to dollar. Okay, we had a low, we broke above, sorry, low, high, low, we broke above, retracement, and then we went up. So we have a low, high, low, we break above. So we have to wait for the retracement for longs. If we start seeing rejections up in here, it's up to you if you want to go short, but I would say wait for the retracement and then we can catch a long. We do have some nice equal highs in here, so that could be a potential target because it looks like we are sideways, so they might take price above this equal high. So if you do get a retracement, then we can take that to go and take out those equal highs. Okay, I'll be monitoring this last up candle in here to see how price, because that's the highest close, yeah, the highest up close candle. So let's see how price will behave at that level, and then we can by all means do something. Okay, Aussie yen price has taken that low. That's what I was looking for. We've not managed to get a meaningful pullback, so I think we have to be patient. Yeah, price has just gradually grind down without any meaningful retracement. So this is when opening price, selling stop above previous day's high is helpful. Yeah, opening price, selling price above previous day's high is helpful. But we are dropping low in this down candle. I think we might take this down candle out, so the same thing might continue where we open and then price will go up a little bit and then a continuation to the downside. On the 4-hour, if we do retrace, then we do have this last up candle. I think if we do get any retracement, there's nothing in here that will stop price, so we probably see price shoot up quickly to here. Similar thing, nothing really much for us to take advantage. Unless you're on the lower time frame, then you can take advantage of this little price action. Yeah, little breakers. We have a high, low, we break, and then we break down, and then you take a short on this down candle for a continuation. But that's happening on the lower time frame, which I don't spend most of my time on. So if you manage to do, then you can catch a continuation to the downside. If not, then on the high time frame, these are the levels I'm watching. On the daily, it looks like they want to take out this low, right? They want to break it to the downside, like the Aussie yen has done. Okay, so let's see if we will get a pullback for an entry. We are very low, from this high to that low. We are very low, so I'll be careful with any any shorts that I would take on this particular pair. Okay, Euro yen, we've got a bounce on here, so let's see. Maybe on this one we will get a bounce to this last up candle, and then we can take advantage for a continuation to the downside. So have this level on your chart, 123.65. okay, have that level on your chart, and then let's see if we get a pullback, then we can take advantage of that to continue going down. Pound yen, it looks like they're pulling back up, so again, be patient. If price does happen to gap here, then you can take advantage of it. CAD yen, we did pull back up into that that last up candle the other day, but it was so quick it ran away. Where I wanted to see was here, but now that we are rejecting, let's see if we can find a breaker and take advantage of it. It's gone, isn't it? Typical. This down candle was a breaker. I think we haven't come back down to it again. So if you do get price to shoot back up in there, that is a good place to consider a sell to continue going down. Let's have a look on the daily first. Yeah, it only came back to rebalance this, so we probably will get a continuation to the downside. So if we come back up to this down candle, I don't like the lower. I don't say, never say never. I'm still learning to be positive. I'm positive, but I'm learning to be extra positive. Never say never. Okay, so I like the lower time frame. I love it. Okay, something like that. If we do get up there, if we don't and we take out this low, then you can do the same thing. This low, that high, this one taken, then you can sell this down candle, but it hasn't done yet, so I wouldn't put that on up. But this is nice. We had a high, we had a low, and then we broke down. Okay, and price hasn't come back for it. So if we do push up there, that will be a good area to consider for a continuation to the downside. The reason why I'm looking for a downside continuation is because on the lower time frame we have a void. So this is a void, and we need to have price come back down at least to this down candle. So that's why I'm looking for a continuation to the downside on this. The actual trade should have been this last up candle there. Yeah, this one should have been the trade. and then we look for a continuation to the downside. However, that has hit and is broken down again, so it's no problem taking it there. Eurocard, we did get stopped out yesterday on this one, and we've seen since then price rejecting. That's where our stop loss was, and price broke that. It's on, if you go on the weekly, it's doing sideways, or it's going sideways, which I don't want us to be playing with it anymore until we get a good level to go again. So what I'll suggest is, for now, we have this high, that low, this high, that low, that high, that broken down. It looks like they want to continue going down, but because you're sideways, it could just continue go up and take out this high. So let's sit out on this one and then wait for proper direction. I want to see us run a stop and then reject and then go the other way. Then we can actually participate in a buy. So if we want to see a buy, I will want to see this high taken before we consider buy. And selling, I don't want to be selling this right now because of the weekly time frame. Okay, we've traded above this down candle. Okay, so I don't want to be selling right now, because if it was to go down, we should have been going down. Okay, this down candle is a weekly down candle, so it's finding support. I thought they were going to take out this low and then reject, then we can do something with it, but they didn't. So if we had taken this low and then reject, then we can do something with it. But the fact that they've run this and come back and this is still intact, we don't want to be interested in this pair right now. Pound Aussie bullseye from here to there. As I kept saying, I wanted to see this price rebalanced, and we've seen that, and I want to see us break above that, and then we can take advantage of that this up candle for a continuation here. Let's look on the lower time frame. There's nothing in here. It's all a mess. The actual trade was down here today, but I did like this one. This was the best one, so we still have this going to that level, and this is also a lesson to myself as well, because I didn't take this. Okay, the reason why I didn't take this is because I didn't like what we are doing on this time frame, but it doesn't matter as long as you see what you're looking for is a process, which is we had this low taken, we had a sharp move away, and then we retrace to this down candle. That is the process, and then you just buy it. Okay, so it's a lesson to myself as well. Next time, and I'll just buy it. Okay, so we will have this last up candle as the target, and then if we break above that, then we have the 4-hour candle here as our target. All right, so I'm gonna leave this for now. New Zealand CAD, absolutely beautiful. If you did catch this, well done. I caught this on my demo account, and I've taken partial, so I'm looking for this move to the downside, because price failed to get to that 50%. I still believe we're gonna come back down here. This is a price action that is unique. Once price doesn't go up, it forms I think I've already shared this with you guys. So we have those 3 down candles. Okay, 3 down candles. All right, and then we look for a break at this one. Okay, so we broke that one. It fell short to hit that. That's when the news came out. It fell short to hit that, and then price rejected. So I think it was running for this. So that's the one that supported price, and then we've seen it move to the downside, finding support here. If we do go into a retracement, which I don't think it will, let's drop down to 15 minutes. I don't think it will. I think they will take out this low. If it does go into a retracement, then I'll be looking for something in that area, which is that 4-hour last down candle in here. I'll be looking for something in there to continue going down. Aussie CAD, price didn't get to that last up candle, and we saw a sharp move away, so we could find a 4-hour level. There's nothing on the daily except this back and forth wicks. Okay, so this also had that price action that I'm talking about. So we had lots of down candles in here, but I'll highlight the important ones. So where we had a sharp move away was here. That's the first one. And then we had a sharp move away from here as well. That's the second one. And then we had a sharp move away from here. So that's the third one. Okay, and then we can see all of them being broken. This was the initial one, broken. And then when that was broken, that is it. Price is going to come down here. Okay, and we've seen that. I'll teach more about this in future. So for now, maybe we'll get price to come back in. There will be something inside here within this down candle. I think on the hourly, yeah, this up candles in here. If we break above this high, we could see price come back up in here, rebalance, and then continue dropping. So nothing concrete on this at the moment. Bitcoin, we are dropping dead again. I wanted to see a continuation to the upside after we took out this high. That was the narrative for us to come back up in here, and they've broken to the downside. I still suspect that we will. I still suspect that we will be riding to close in that. It's annoying. Yeah, price is finding support here. I still suspect we'll be coming in here to rebalance. Even though we've broken down, it was more of a stop loss than a breakdown here. A stop loss run, I mean. Yeah, a stop run than a breakdown. So I still suspect we'll be coming up here. If we take out this low entirely, then we're coming down here. Okay, so if we take out this low, then we're coming down here. But as long as that one is still intact, I think we still go up there. Okay. Gold. So funny thing happened on my demo account. I had a sell limit on the 4-hour, and I completely forgot about it. And that's the beauty. And when I saw it, I was so surprised, like, wow, did I catch that? So I had a sell limit on, let's go on the, I think it was on the hourly. Yep, I had a sell limit right at these candles. I had a sell limit there. So when price got up here and it didn't get there, I totally forgot about it. I didn't even bother looking at the trade again, right? And then I left it. And then yesterday I was going through my my summary, my report, and I saw that, oh, my account has increased significantly. I'm thinking, wow, what happened? Then I went in and checked, and then I saw that my gold trade got triggered. Yeah, so my sell got triggered and I didn't even see it, and it took profit even way ahead. So my profit was taken right here, which was not meant to, because when it took their profit, that's when it even dived down even more. Yeah, so I was happy, but I was thinking, okay, so if you took it, why don't you take it all the way down here? But I think at that time we were considering a trade here, so that's where I decided to take my profit there, and then it did that for me without even me realizing it. So that was nice. So if you do get price to come back up in here, and for now we do have this for our level here, so that could be meaningful. Let's drop down to the hourly. Yep, that could be meaningful. It's lining up with this breaker in here, so that's fine. It's lining up with this breaker in here, so that's fine. If you get price to come back there, I think a sell at that up candle with a stop above here will be okay. So something like this, and then you target the downside objective. So you'll be looking for this low and then the down candle in here. I think the dollar is gonna continue going up, and we'll get gold to go into retracement. Let's have a look on the weekly, because we'll be looking for gold to continue going down to I think November, December, and then we will be looking for a turnaround for Valentine's buy. So they'll start buying in advance in November, December, and then by February we should see price going up again on this. And then finally oil is playing around on the weekly, on this weekly down candle in here. So be mindful of doing anything on this, because we are stacking. That's the weekly down candle, and price is playing around. For more peace of mind, at least look for a run on stop and then a rejection before you take any trade on this. If not, then wait for this high to be taken out before you look for buys. Okay, and that will bring us to the end of our session. I hope you got a lot out of this session. I did as well, because as I'm talking to you guys, I'm also talking to myself. So hopefully you got something out of it. If you have any question, anything you want to ask, anything you want me to look for you, by all means do so before I disappear. One of these days we're gonna have an interaction session, so that we can actually have a conversation. Does anyone have any question before I jump the ship? Okay, so I guess no one has any question, so I'm gonna jump the ship, and I'll see you guys at 2 o'clock on YouTube. Okay, so enjoy your morning, and I'm going to enjoy my sleep, and I'll see you guys at 2 o'clock. Take care.